What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. I apologize for not doing a video yesterday. I was not able to do my analysis because I was traveling from the UK back to the United States, which is my home country, and I was moving all my stuff back. Had a extremely terrible travel day with a 24-hour layover and a lot of nonsense with either little or no Wi-Fi at all. So we're back again today, though. Let's take a look at Bitcoin. We got a monthly close coming up here in about 17 hours. Right now we can see that the candlestick is not looking convincing for a bounce. We have a short lower wick right now. We still have, like I said, 17 hours to potentially push this up, but right now the wick of this candle is looking extremely bearish if it were to close where it is at now or even lower. So we'll see what we get in the, I guess tomorrow. But for right now, if it closes like this, I would expect that this is not going to be our higher low that we're expecting. On the monthly time frame, we're going to have to go below the previous low at least, and then we'll probably dip somewhere into the 20,000s range. And let's see where we may bounce. If we're looking at, so what we can do if we're looking at our high time frame like this is we can say, all right, we're expecting a bounce somewhere above the $9,800 level. We're not expecting us to just go up to 65K and then drop all the way down to 98K, 9,800 rather. 98K, that'd be nice. If we dropped all the way down to there without even forming a higher low, I mean, that'd be insane. It's possible, but it's unlikely. So we'll continue to look to see where that bounce will be. It might not be where we just went down to at 29.1. So if we go to the lower time frame, we can see where that potentially might be. So on the weekly time frame, the next support zone for us is going to be this zone over here back from December, which is this candle when we had the bull pattern here with a higher low and then higher high. So if we drop down to that level, that would be at about 19,450. I know it seems crazy now because we're at about 35K, but a few weeks ago we were at about 59K, and so it seemed crazy then to see the drop that we saw. So anything is possible in the world of cryptocurrency. Like I said about this blue level, though, if we do not get a bounce on this level and we push right through this and close 2 weekly candles below it, this is going to be a very strong resistance level that I will look to go short on with my stop loss above if we do end up having that scenario play out. Right now, we just closed the weekly candle, which was this candle right here. The only thing bullish about this was that we had the increasing above average bull volume. Besides that, this candle looks very bearish because you can see we traded up, but then there was a sell-off in that week and we closed back down below. And so it's it doesn't look convincing in my eyes in terms of the bulls buying the dip. Obviously, there was bulls buying the dip with the volume that we saw, but the candlestick itself doesn't look very, very convincing for me. But we'll see what we end up getting. If we break below the low of last week at about 33.4, we'll probably go down, down to this low here at 29.1. So we'll see what we end up getting here. If we go to the lower term time frames, in between the light blue zones, which are the weekly levels that we were just looking at, we also have this support zone back here, which is a 2-day level right here where we had the bull trend. So that's here from December 20th, and that goes from about 24.4 down to about 21,960. If we look at the 2-day time frame as well, this last 2-day candle that just closed looks convincing for a bounce. So we'll see if we end up getting that. It would be, pretty likely, like that we could get a bounce there, just because we did have such a significant bounce here that I was anticipating us, and we talked about on this channel, us forming a higher low somewhere above the previous low, and then seeing us either come up and form a lower high and then a lower low again, or come up and form a higher high. So if we go to the daily, we can see that this is what we consider to be an equilibrium pattern. So an equilibrium pattern is where the price is starting to contract, meaning that it's becoming less volatile. The price movements are less volatile, and you can see that we have a low, high, higher low, and so the price is tightening up. It's not forming higher highs or lower lows. It's just continuing to form lower highs and higher lows until eventually it's going to either break up or it's going to break down. Now, when you're looking at a pattern like this, you need to be aware of the scenario you're in the market. Are you in a bearish scenario on the higher time frames or a bullish scenario? Since this is on the daily, we need to take into consideration the weekly and monthly time frames, which we just looked at. The monthly is looking very bearish, so that if we get a candle close that with a short lower wick, the probability that this breaks down is more significant because of that. Same thing on the weekly time frame. We start to see weak price action on the weekly. This starts to have a bearish bias as well. It would be different if we saw on the weekly and monthly time frame a bullish bias appear, because then this would start to have a bullish bias as well, that this would likely break up. But you can see when we look at things like the super guppy, this is increasing our likelihood that we're going to break down as well, because this is now after a significant period of time being in the bullish scenario, now we're in the bearish scenario here with the red EMAs and the dark blue EMAs. So we'll see what we end up getting. But this daily equilibrium pattern, depending on the way it breaks, is going to signify a significant price movement, because when price tightens up like this, it tends to kind of snap like a rubber band when it actually does break out. So it's either going to break out and go up significantly, or it's going to break out and go down significantly. So if it breaks out and goes down significantly, I expect this dark blue level at a minimum, and this is 24.4. If it breaks up, I'm expecting this gray zone up here, which is at about 47K. And that's from our previous resistance. If you don't know, we talked about this in the past few videos, so you can go back and watch those if you would like. Let's go to the little bit of a lower time frame here. If we go to the 4 hour, the 4 hour is I mean, like, the price action down here is not looking convincing in my opinion. So we had a potential head and shoulders pattern here with a breakdown, retest, and then a rejection here. And then we started to kind of bounce around in this zone before going to the actual target of this head and shoulders pattern. Or maybe it did. I don't know. I didn't really measure it out. But now we're potentially seeing an inverse head and shoulders pattern here. So we'll see what we end up getting here on the 4 hour time frame. But for me to be convinced that we're going to have any sort of bullish momentum, we need to see a higher low and higher high. We need to see the bull pattern, which is a low, high, higher low, and then higher high. And right now our main resistance zone is this yellow zone right here. Whoops. Yeah. Will you stop? Yellow zone right here, which is from our bear pattern right here with a high, low, lower high, and then lower low right here. And you can see that we already rejected off of this level once right here. So yeah, I guess you could consider that actually two tests, because we came up here, came down, came up into it again, and then came down. So either way, this is the main resistance zone to watch. And above that, we have this other yellow zone, which is from the 12 hour. And this is that zone that I talked about either last video or the video before. But I talked about this becoming a resistance zone and a potential short opportunity. You can see that played out just like we had talked about, which is, you see we had the the high, low, lower high, and then lower low with 2 candle closes below the key low. We draw our box. As soon as we see this candle close, we can see the next subsequent 12-hour candle go right into it. And then if you were to short on the bottom of the wick of that candle, that was about a 10% trade over the next day. So that was a nice trade there that we talked about on this channel. Very happy to see that play out. And right now we're currently trying to form a higher low right here and then come up and try and form a higher high. So we'll see what we get. But that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner tactical analysis course if you're just getting started learning how to trade and invest in cryptocurrencies. It's going to help you lay down that foundation of understanding that you need to get started generating consistent profits for yourself, trading cryptocurrencies like Bitcoin and others like we talk about in these videos. We go a bit more in depth in there. We talk about specific concepts and we give you a bunch of information on things like how to read candlesticks, how to read trends, how to read volume, and a ton of other interesting stuff as well. So check that out. We're currently running a 20% off special up through the end of this month. And until tomorrow, onward and upward.